Welcome to Twin Signals, Metrics at Work, with Elizabeth P. Morgan. Because metrics only matter when everyone agrees on what they mean.
In this episode of Twin Signals, Metrics at Work, I speak with Jean-Yves Laffon, General Manager for France and Benelux at Appinio, one of the fastest growing AI-powered market research platforms. Jean-Yves brings a strong metrics culture shaped by a bootstrap business where growth is always balanced with profitability and every decision is grounded in financial reality. At the center is his key metric, win-loss, and what it reveals about market fit, pricing, and competitive dynamics. We explore the challenges of operating in a highly instrumented organization where people who are fluent in quantitative metrics struggle with the reality of infobesity, navigating over 100 tools. Looking ahead, Jean-Yves argues that in the age of AI, clarity of goals and tight governance and control become critical. With more automation and output, success depends on being precise about what you measure, how you control it, and how you prevent mistakes at scale. Hey everyone, welcome to Twin Signals, Metrics at Work. I'm talking metrics with Jean-Yves Laffon today, General Manager for France and Benelux at Appinio, one of the world's fastest growing AI market research platforms. Hey Jean-Yves,
Hey,
thanks for joining us.
thank you for having me.
Jean-Yves, I was thinking back and recalling when we worked together years back, selling market insights platforms to the world's biggest CPG corporations. And I remembered or realized you were one of the only people in that whole company that had real business experience inside global CPGs like Coca-Cola and Unilever. So you deeply understood how our customers were working and the metrics that they were reporting against. And I think that was one, I know there were many other reasons, but I'm sure that was one of the reasons why whenever I was working through a major deal or customer escalation, I really wanted to have you in the room with me. So friends that don't know Jean-Yves, let me tell you, he's a real business all-rounder. He has a deep instinct for what matters commercially, and he is all about metrics at work and metrics that work. So thank you, Jean-Yves, for joining me and being here.
Thank you so much, Liz.
So maybe can you just start us off by describing Appinio for the people that are with us today, your customers, the sales organization?
Sure. So Appinio is a market research company. We are basically helping companies to make better decisions. And we try to offer the best combination of AI-powered efficiency with, true research expertise. Basically, the best combination of AI and HI, let's say. We're a bootstrap company. We exist for 10 years, and I'm taking care of the French-speaking market, and we've been growing double digit in the past years. Around 20 people in my scope, and we are working with all types of customers. So obviously, big enterprise insights teams that run a lot of market research, but also marketing teams. In markets, we're also one of our primary goal when being founded was also to democratize the access to market research, which nowadays become very obvious with AI, but 10 years ago was not so obvious. So we work also with a lot of startups or smaller businesses, also with consultancies and agencies that have a different businesses, but also needs a lot of data.
So if that's how that's the big picture of the business with many market segments served, what can you tell me about the way that you use metrics to run the business?
Yeah, well, we have a very strong metrics culture. We are, as I said, a bootstrap company, so we use a lot of metrics for us, for our own growth, for checking that we generate enough cash, we are profitable, growing, and we also in market research. So KPIs is basically what we sell, also quant research essentially. I would also say every employee is very sensitive to metrics because we have very strong, very high transparency within the company. So every month we share the whole P&L of the company, how we're doing, so we go into pretty deep financial KPIs that I've never seen before in the organization. So that make us also we are remote first, by the way. So um, everything is about tools, having access live to what you need because you don't see a lot of people around. Yeah. So altogether, that makes us very driven by metrics and used to handle KPIs on a daily basis.
So it's like bootstrap vigilantes that are focused on growth, profitability, cash, cash, cash. Huh?
Yeah, I mean, the thing is that if you want to grow fast, you need to invest. But if you bootstrap, you also need to make sure you're profitable, right? So it's always how much can you afford to invest, and then there are costs that are not typical to B2B businesses that come on top in the P&L that we also need to steer when opening a panel in the new market. That's also investment. So a lot of things to balance in terms of spends versus revenue.
And what's the tooling you're using to get your arms around all of these metrics and numbers?
Yeah, well, we have a lot of tools. So that's probably one of the common we get the most when people start. Also sometimes coming from more traditional companies, is that we have a lot of tools. So obviously we have the classic tools like CRM, like com tools. We also have like project management tools like ClickUp. So our CRM is HubSpot. We have also our own platform to handle research, but also the credits from our clients. And also we have a lot of integrations between all this stack. So that we can, HubSpot talks to our platform, to ClickUp for project management. And we also have, we use tools like Tableau to aggregate all that data and have a macro view on everything. So yeah, and I was talking about B2C. On the B2C side, we'll obviously have other tools like to handle our mobile apps and everything. So yeah, lots of tools. I think we counted actually. We have over 150 tools that plus functions, of course, but yeah.
And then you're slicing and dicing that for countries and for teams and for individuals, or?
Yeah, we just revamped a little bit our go-to-market, setup, because we had actually one of the improvement area we identified was that we had too many tools for different departments, and we tried to refocus a little bit each department on one main tool by creating more integrations and reconfiguring, CRM and everything, to minimize a little bit the juggling around with tools per department. So each team has one, main tool, and they have to use some other ones, but at least they don't waste too much time juggling around. So yeah, we try to optimize, of course, for each department. You have your set of KPIs that require a specific tool, but let's say the objective is really that 80% of the time you're using one main tool that you really can master, and you don't lose time. So efficiency is really nowadays the driver, right, for every company, and even more when you're bootstrap.
Yeah. And you also doing OKRs on that framework?
Yeah, no, absolutely. We have OKRs, global OKRs that are also being used locally in different markets, and each team's departments markets contributes to those OKRs and have their own initiatives. So that's something that is taken very seriously, and then we have reporting on a monthly basis, upwards, downwards, to the team and also to management. So to keep us accountable of achieving our strategy, essentially. So that's a great tool.
So you're enjoying the universe of data around you as you forge forward in France and Benelux?
Yeah, I mean, it's also like, curiosity. Like the more tools we have, also the more KPIs and data we discover. And I mean, I would say we're a young company, and we're not like extremely sophisticated. We grew pretty fast, and we also grew geographically, which means we have a lot of, we have around 250 employees, but it's also because we have different markets. And so we're not like having 200 KPIs, like, sometimes I hear about some KPIs that I've never heard of, or so we still focus. We have, some KPIs, and we have probably dozens of those, but we still, I think, have pretty focused set of KPIs, specifically because what matters to us is first that we can eat at the end of the month, so generate revenue, making sure that you have the right margins so that your costs are not higher than this revenue. And a few other metrics that want to also show growth, like net revenue retention and things like this. But I think it's probably pretty standard from that perspective.
But still, it's a pretty rich portfolio of metrics you're looking at. Let me just follow up by saying, what are the ones you ignore? Like what metrics aren't important for you?
Well, I cannot speak in the name of my organization because I think we have a lot available. I mean, we have over 100 KPIs in Tableau if we want to look into it. But I would say, because we have a strong diversity of clients types, for example, I was saying we work with small SMBs, big enterprises, things like, average contract size is an average of a very, let's say a sample with a big variance. And so it doesn't necessarily mean much. I mean, over time you can see if it goes up, which is obviously positive, but maybe not a priority KPI to look at. Some other things could be nice in theory, like the average sales cycle, how long it takes us to close. But for the same reasons, when we sell a big deal with an enterprise, it takes much longer than a very small project where we just get a brief and it's very transactional. So big variance, also with sometimes hard to get the data very accurately because we have automatic renewals, so deals can stay open for a long time. So average sales cycle is also something I personally don't spend too much time on. For example, right?
So when you look at when you take into account making sure that that you've got enough to eat at the end of each month and ignoring things that aren't so germane to your business, what is the metric that you think you can look to and depend on? Or one of them. So,
I mean, what is really important for us is that we learn as much as we can, right? Because we're still kind of young on the market. I mean, we are operating in France for 5 years now, and we're in a very saturated and mature market, all industries. So we need to steal any market share needs to be stolen, really, and so we look a lot at our win rates. When do we win? When do we lose? Essentially, right? And why? Why do we lose? I think that's probably the most important things to try to understand what's happening and how we can improve and change stuff to basically bring all those KPIs up and increase the conversion rate and ultimately get more with the same amount of work and the same size of team.
So if we drill in a little bit to win rate, what is your win rate formula?
Yeah, I mean, there's a very simple one, which is to just look at the end of the month, how many deals were won versus the sum of won plus lost. If you want to be a little bit more, like, let's say not too harsh, because sometimes when you do that, you also see lost deals that were dropped very early on in the process and that not really realistic. You can also just use the conversion rate from proposal send to won, right? And that's usually a little bit higher. But that's the two ways to basically look at it, I would say, from our perspective.
And do you segment that? So the first thing is to be very clear on the meaning of what is a deal, like where does a deal start?
Yeah.
And then are you segmenting the metric for different types of customers, or are you happy to look at the overall number for France?
That's actually something we just, as part of this new revamp we also made sure to really differentiate what is happening at the lead level versus at the deal level. And, I mean, we were not really using all the features of the CRM until now that actually allow you to really use different features for those things. So now it's very clear that you only get to talk about a deal, handle a deal once the lead is qualified. And so in that way, then you enter a different pipeline where there's very clear enter and exit criteria at each stages. So we wanted to, of course, minimize the ambiguity and then the risk of having like wrong information that's impact, of course, predictability and forecasting. So I think by now we have something that is pretty clear. It's hard to really not have the right deal at the right stage and without the right reasons. When it comes to the different types of customers, we look at it a bit differently for some clients, especially, when you work with B2B companies like consultancies or agencies that work themselves for end clients that can also be our clients. Most of the work we do for them, or let's say the way we work with them, is that they pitch for RFPs. So if you think about consultancies or agencies, they constantly pitch, right? Their win rate is, 20%. I mean, it's a very competitive kind of market. Obviously, your win rate is much lower if you work for these verticals than if you work for other ones. So this is typically a segment that we will look a little bit differently. Also, it's project by project systematically, and so yeah, we have this is very different segment, and then among the other, let's say, advertisers, more standard advertisers, we have also the size of the company, different ICP levels, we call them. So we also look at that to see if there is discrepancies, and we try to grow on all segments, but sometimes there's opportunity or quick wins to prioritize one over the other.
So when you're looking at your advertiser community, for example, what would be what would you be happy with as a benchmark win rate?
Well, I mean, we also see interesting. It just remind me that we also see difference among markets. Obviously markets where it's very saturated, a lot of competition, much more bidders on each RFPs, and then markets where we're originally a German company. And Germany has this great thing that it's not extremely mature in market research. I mean, there's less players here than there are. I'm saying here because I'm based in Berlin. That they are in other markets like France or the US that are very saturated. Also, we look at it per sales rep, right? And you see pretty big discrepancies. So I would say anything between like 60 and 80% is something that is pretty good, and that we have actually in a lot of teams at the moment. So we're pretty happy with that.
Cool. So just to recap, the because of the process you've gone through of re-engineering your metrics, everyone is pretty clear about when a deal is a deal and what the stages are for that. And there's also an understanding that there could be cancelled deals that need to be eliminated from the metric early to make sure that it's reasonable. And then you're also looking at the metric per segment and per market to understand the nuances, and also per rep. So slicing and dicing it to get the value from it.
Exactly. And I mean, of course, the next step is not to only look at the win rate in that case, but also like the loss reasons, right? That comes as a complement to understand why would a rep have like a much higher win rate? Why that segment better? And you need a pretty good history to have a data set that is, big enough to be robust. Because if you just look at a month or quarter, it's we unfortunately don't have like hundreds of deals every month yet in my scope in France, but yeah, history give us good benchmarks, let's say.
Excellent. So Jean-Yves, obviously you're getting a lot from metrics, and you're seeing some predictability in your business. Could you share a moment when a metric revealed something unexpected that led you to change direction or do something? So when you actually acted on a metric that you had to hand.
Yeah, sure. Yeah, I didn't mention it, but with my scope, I'm handling basically sales, customer success, marketing, and research. These are the core departments. So I have an example I'm thinking of about marketing, and specifically when we started to experiment a little bit with SEA. And we were obviously measuring ROAS, so the return on ad spend. And when we talk to performance teams, if you're above 1, that means that you're somewhat profitable on this investment. And then on the one side, I had this kind of positive feedback. On the other side, my team was saying like, we get a lot of kind of useless meetings because people can actually book directly from our website in our calendars, and sometimes we have a lot of students that want to do research for free. And so, and then the projects we would win that were basically coming from SEA were not necessarily projects that could repeat and that were very profitable. So yeah, we dug a little bit more into that, and we realized that actually we were not profitable, even though the ROAS was like over 150%. I mean, 1.5, let's say. These were projects that were usually B2B research, very hard, with a higher costs in panel and recruitment, and also deals that, projects we would not, and very likely redo. Smaller companies or companies that would do one research every 2 or 3 years. And so adding all of that together, we just realized that we were actually taking a lot of time away from our team, both the sales team that were handling and qualifying those opportunities, but also the research team is executing on those. So that to at the end not even be really profitable if you compare the money we were spending on that ad. So we drastically reduced the investment. I mean, that was very interesting to see that each country has a different performance on that approach. Works pretty well in the US, obviously. People are more using search engine to run research than in France, where everyone knows, the players and everything is, as I was saying, very mature market. So we reduce the spend, and we also requalify the research terms, and we streamline that so that we don't get like very open search terms that bring a lot of noise. Yeah, in the end, that was a good decision, and we're constantly now working on that, especially now that AI, talking about geo now, investment potentially in the future, Gen AI chats and stuff like this. So it's constantly moving, but let's say that was a good example.
I guess also when you think about ROAS, it's ROAS. It's important to recognize that the return has to be accurately measured, right? So you were including the total value of projects, or your marketing team was including the total value of big projects with small margins. So carrying a lot of cost in the metric and inflating the result.
Exactly, because I think the definition of the ROAS is to check revenue, but since we're running research and we have actually costs to recruit and everything, that doesn't mean that that revenue means a lot of profits or enough profits to compensate that spend. So definitely something to look at when looking at those pretty standard KPI. That
Yeah. So I guess I mean, again, it's a question of unpacking the metric, like not just assuming that a global number will do the job, but unpacking and digging deeper to make sure that you're focused on exactly the number you need to focus on to deliver the truth. Huh?
Yeah, 100%. I mean, we had the same in sales, where sometimes we were talking about win rates and loss reasons, and we always checking with the team and asking them to review their loss reasons to try to understand if, first of all, everyone has the same loss reasons, across segments, ICP types and stuff. And I was hearing stories sometimes that we were losing on price, but essentially when you lose a deal, you can put the reasons, and it was not coming up necessarily for each of them as a primary reason. So we looked at it into more details, and we had like 4 or 5 different reasons on price, and when you put them all together, actually it was the first reason, or one of the first reasons, let's say. And it was also interesting because very saturated market, which means high pressure on prices and a lot of competition. So sometimes one of the important reasons was also habits. A lot of people have their research provider that just move. They don't change like this unless there's an incentive that could be actually that you are faster, you're cheaper, you're more relevant. And in some cases, we didn't lose on price because we were too expensive. We just lose because we were not cheaper enough than for them to try something new, for example, or not differentiative enough. And so based on that, we actually review our pricing, because we realized there is actually things we can optimize to. We don't have a major problem on pricing, but we could definitely win some market shares. And as a project-based business, it's all about the first project, so that you get an experience with the client that can then continue working with you. So that first project to win is important. So being more aggressive on pricing, and we could afford it because we have pretty good business model in those research projects, and thanks to tech, compared to like more consultative heavy kind of players, it was a good decision to revamp that. And I built a calculator for the sales team so that we also try to be consistent there and win more projects.
Okay. And I guess also for a research company and for a metrics discussion, it's also a lesson to be careful about your drop-down menu and make sure you're clustering your reasons nice when you're giving people
I mean, that's hygiene of CRM is just so crucial for anything, performance based or like any analysis. And of course, it's a constant work to make sure people pick the right reasons. We also add some new reasons, we close some, and making sure everything is actually accurate. Otherwise, you just cannot really work with it.
Jean-Yves, are you getting sun in your eyes there?
The sun has come to Berlin, and so I have curtains.
It's my pleasure to share that Twin Signals, Metrics at Work, is sponsored by HelloTwin.ai, the semantic operating system for SMEs. Hello Twin, stop managing agents, start managing outcomes. Launching June 24, 2026. You've already said that the organization is super focused on data and metrics, that everyone, it's very transparent. People have access to, numbers and business information that is unprecedented in most experience with EBITDA and so on. How do you think people in your organization are generally reacting to metrics and dashboards? Do they understand them? Do they engage with them? Do they tolerate them? Do you have resistance?
So, I would say it depends also a little bit on the profile of the department where we recruit people. So we sometimes also recruit people from more traditional institutes that have great expertise, research expertise, but less tech experience, so much less familiar with these all dashboardings, tech tools and KPIs. So, but in general, because they work in research, they're really used to KPIs and numbers, and that's, I would say, the big strength of working in that industry is that people are very number driven in general, and so it's more a matter of actually learning how to use the tools and getting the right data. I have to say, sometimes you can get the same data from two different tools and it doesn't necessarily match, especially when you aggregate data from different tools. And so this is more about that, knowing which tool or which dashboard for which data so that you're efficient, you have everything you need. We're trying to streamline that on an ongoing basis. But I think that's as this kind of infobesity and also the amount of tools that can create a bit of confusion more than the ability to really use them and be familiar with them. I mean, of course, there's KPIs that people don't know, and we need to, if they are important, we need to explain them why they're important and how to use them. So it's a constant, education.
You're saying that as you connect all the data and you have multiple sources that are delivering the same named data, the same column names, if we want to go really specific, then it's about how do you harmonize them and how do you establish the discipline of saying, like, that's the number we're going to use and make sure that the governed number is being used systematically.
Yeah, exactly. I mean, we work a lot with our business intelligence team. When we see things that could be off or discrepancies, we make sure to address that pretty quick, because of course we want people to use numbers and to rely on them, but that means it needs to be very clean. And we also starting to use AI tools. I mean, some of our teams have started to use AI that can also scrape different data from different tools to give you some reporting, and so looking at the same thing on an ongoing basis. And in a kind of push way, so even though you can educate people as much as you want, some will be much more number driven and check their numbers every day, and some will take more time. And now there is ways to actually push some reporting on Slack or per email that aggregate all of that, and make sure people check those numbers and
the numbers to the people. Yeah.
Exactly.
So you're using AI to customize a set of relevant insights for the people.
I mean, we have some of our teams have been exploring using, for example, Cloud Cowork, to give it access to your CRM. You're not taking tools from each meetings, your Slack. And asking it to produce a weekly report on Mondays where it actually tells you everything about your pipeline, about your sales rep team, what is at risk, what is good, what is not good, and you can basically capitalize on everything you've been saying in your calls, the topic you've been discussing, and so it's very early stage, and it's not something we do on the company wide, I would say, but there's first pilots like this that are interesting. Because you can also send that to each sales rep with a scope that is very specific to them. So yeah, interesting opportunities, of course, with all these new tools, and especially Cloud Cowork that is now doing a big build, of course.
I mean, of course, and I'm hearing you saying that Claude Cowork is really helping the team to go through their conversation intelligence and to look at their deal descriptions and so on. So it's providing good support on the qualitative side to capture the key points. So do you have any experience with, I don't know, Claude and an MCP to try and work with your metrics, or is that too still scary terrain with hallucinations and so on?
So that's a good point. I know it's not that straightforward, but because we haven't really, this pilot is not currently happening with my team. I cannot really comment on the details, but what I know is being used is essentially Claude is able to check at your CRM, look at the data, the pipeline, the deals, and draw some conclusions that, at least for the first results, were not or didn't seem to be really off and they were pretty useful. But I would say it's also very high level and basic. It's like what's current deals, what's that risk, what has been moving for a while, and so I think the more you dig into more technical KPIs, or you also need to configure quite a bit and explain it, what is what. So a lot of opportunities also to make mistakes, or but that's a continuous learning at the moment, I think, with those new tools, and also understanding, what can we use, not use. Also, IT needs to check that, because giving access to your entire suite of tools is always a big topic as well. So we're not there yet, but interesting perspectives actually lining up.
Are there one or two metrics you wish every team member truly understood at a deeper level?
Yeah, I mean, I wouldn't say it's a metric. I would say it's more a mindset. I think we are naturally a little bit, focused on what's coming to us and what's available. So if you think commercially speaking, a lot of commercial profiles, be it like CS or sales, we're looking at the pipeline that there is, the product that we have with our clients now, and we know there is a target we need to achieve, but there's much less proactivity that it could be on being really predictability focused, and say, okay, we're getting back to doing the analysis, actually going deep into the data and say, okay, what is my win rate? What is the pipeline coverage I need based on that win rate, so that I can have a good chance to hit the targets? And what does that mean? How many leads do I need? How many opportunities? That's, people usually don't go that far. And so when you discuss with them on, where are we? If you're not on track, this proactivity that is sometimes missing, and this understanding on connecting all the data together to actually be able to have a plan. It's much easier to say, well, I don't know if there's a business coming in or not, because we are project based, and so you need a piece of research now or not. It's hard to predict, right? So there's some truth to that, but there's also things we can do, at least know how much we need to have in your pipeline to get to where we want you to be. So it's more this mindset of being more focused on how to predict and make the KPIs speak to each other, so that you can actually have a plan. But usually there's a lot of things you can do if you know your own metrics and you actually dig into, analyze. To get back to what we were saying earlier, is if I know, what's my win rate, also the seasonality of the sales from the past years, because it's quite a seasonal business. You can calculate what should be your pipeline coverage to be able to achieve your targets. Based on your win rate, how many opportunities that means, and then how many leads that means you need to have. So, being into that projection kind of mode and say, okay, I'm not so much on track this month, but that's my plan. This is how much I can generate doing this and this, and if I get there, I can get to that number, and it's what we all try to get into, having more answers and using the numbers to get those answers as close as possible to the reality.
So in understanding pipeline coverage.
Yeah, but based on your own metrics, right? Based on how you perform, and so you need to first look at the past to understand and try to predict the future. And usually, sales are sticking to the money that they're gonna make or be able to sell on this month or revenue, and this strategy aspect is sometimes left out because too much work on the operational level. But that's very important, I would say.
And then thinking about, like, you're running marketing, sales, success, are you seeing mismatches or disconnects in understanding of metrics across those functions?
I would say there's one metric that is always causing a lot of discussion, which is the one KPI, let's say the marketing qualified leads. What is it?
Too well.
Is that just the right a client from the right company that went on your website and book a meeting? Is that people talk about sales accepted leads? That's one that is always a bit tricky, and I've heard a lot of talks about this, and I think one of the problems is also that the incentives are usually the wrong ones. So if you give an incentive to marketeers on the amount of MQLs they generate, they will try to inflate that number and provide opportunities, or let's say leads that are not real leads to sales. So it's a waste of time for everyone. And so yeah, that's the one that comes to my mind, and that ties into the right incentives and the right qualification criteria, and having a revenue teams that is like sales and marketing working together.
And you've achieved that, so you incentivate your marketers on sales accepted leads, and everyone's working together on the goal.
Well, working on that, I mean, as part of the revamp we just did, is that we now use the leads toolkit from HubSpot, and you can automatically score your leads based on different criterias, and if they come to your website, there's like a point system, so that if you reach a certain amount of points, then you become you basically send to sales. But as any kind of automated solution is never perfect, and so we're constantly tweaking that. Now we're actually looking at all the leads that make it to the sales team, and reassess whether they shouldn't have, and what criteria we can tweak with the data we get, right? Because it's only based on what people input when they go to your website. So what you know about them, sometimes you still need to manually see, okay, which company was that person from, and then all of a sudden, if it's a marketer from Coca-Cola, then it should definitely be. So it's also this notion of how much can you automate, and until which point the automation is good enough, or then you need to add a layer of human a little bit.
You have already mentioned that the team is exploring Claude Cowork, and you have a couple of projects going. What has been your experience so far with AI at Appinio, behind the scenes? I mean, I know you're an AI-powered product to an extent, but when you're working with metrics and working with your teams, what's the AI experience been so far?
Yeah, I mean, I think, again, being bootstrapped and very focused on efficiency, we really started to focus on AI internally to make our core functions more efficient, especially our research function, because we're doing a consultative job. We create reporting, and that's the heaviest part of the work. So we prioritize really AI and automation features to become ourselves more efficient. And because we do the same job that some of our clients are doing, sometimes we do the research for them, but they can also do it themselves on the platform. If it's successful with us, then we push it to the tool, and it becomes an AI feature for clients. And so we had a lot of initiatives like, workshops, mandatory AI workshops for everyone, where you had to come with like 3-4 tasks that you don't like to do, that are pretty recurring and could potentially be automated. We had a weekly automation sessions where also we're showing how we can use different tools to save time, and all of that actually got attract. And I think by the end of last year, we were, if you add the savings of hours across all departments, we were at 600 hours saved per month. So that was a pretty big improvement. When it comes to like sales specific aspect, for example, I think there we really need to step up. We don't use AI enough, but what we use, for example, in like, note taking tool like Granular or Fathom in the call that tells you live, how much you're speaking, if you're doing a monologue, like these are coaching kind of features or analytics kind of features to create meeting notes automatically, push that to your CRM. You don't have to kind of waste time on that. Also, CRM is now equipping their toolkit with AI, can help you on creating dashboards, answering you, giving you answers. But yeah, we're not yet at the point where we create agents, agents to do SDR jobs, nurturing and everything, which is what I'm reading at the moment. But hopefully we'll get there at some point.
So you're anxious to start harnessing and unleashing, I should say, a team of agents into your organization.
Yeah, I mean, I'm reading a lot and was reading like this disaster story where, there used to be 20 people, now there are 3 people and 20 agents. There is some tasks that are better done by AI than by humans because they're just, tiring and they're very error prone. So like following up on like hundreds of leads and being as creative in your messaging every time.
So looking forward, Jean-Yves, and thinking about the quarters and maybe the year ahead, I don't want to say 2 years, 5 years, but looking forward, where do you see metrics heading?
Yeah, I mean, what's pretty sure is that we have a shift of focus from, growth at all costs to, profitability, scalability, especially with AI company now setting like the complete new benchmarks in terms of revenue per employee, etc. So I think ROI has never been as important as now, right? And making sure that whatever you do, you're profitable. Even as a company, if you want to raise money nowadays, without a really clear and short path to profitability, that's very difficult. So I think in general, we're gonna look at much more at margins, not only at revenue, right? Revenue is something that is very important, but revenue without, if your costs are basically higher, then you won't go anywhere. So I think from that perspective, looking at ROI, margins, EBITDA, things that are very prominent now. I mean, it was always for us as bootstrap companies, but there's more and more bootstrap companies now. And yeah, I mean, I'm curious to see how also AI will be able to help there. I was reading some stories about, one person company using a lot of agents where the founder was also like suggesting some marketing spends, and then the AI was able to say, no, but we are better off investing that same amount of money in our projects. So I'm hopeful that AI can also help our employees to have that information, because measuring ROI is very hard for some functions, for some projects. But AI can scrape a lot of data and aggregate that. So that would be something that would be very interesting. And at the same time, there will be more and more agents as employees that will potentially also generate their own revenue. So I'm sure we'll also move towards new metrics that will be very much related to tokens, because I'm hearing a lot about that as well. The new barrier to AI is not anymore the technology, but already the budget you can afford to allocate to your employees. No? I mean, those new tools are consuming a lot of tokens, and at some point, also reading that some agents are generating sales already. You will probably scrutinize what's your ratio between revenue generated and token spent, for example.
I guess there's also this idea that, I mean, historically, like you want to get something done, you want to open up the market in France, you hire a general manager for France, and that general manager is making the call on what the target is, what the goal is, how the goal is executed, who is doing the work, what progress is being made, where the business impact is, right? And I guess hiring those agents is going to come with a similar load in terms of how you manage and control the agents to get them to work toward your goals.
Yeah, that's always the same thing. I mean, you will have to be extremely prospective, much more prospective than you used to be, right, with employees, where you can basically see every day what they're doing. And I think that's the biggest barrier and fear, to be honest, that everyone has, is that, and you have now all these success stories that I think it's a lot of marketing as well, right? The first movers are pushing a lot of success stories, but there's also like I was reading that one developer used $26,000 of tokens from Claude for while he was only paying the 200 euros per month plan, and that's very unsustainable. And that's also kind of things that can happen when you let loose your your agent that start burning tokens and potentially doing the wrong things, and not even mentioning when you give them the budget. There's also some experiences now giving them like money and see how they controlling that and having the right governance is going to be the biggest challenge, I think, in the next couple of years now that we have agents. And the guarantee on that, because even if you have only a 5% chance that your agent is going wild, that's probably too high of a risk for some use cases. Yeah, so definitely exciting, but also a bit scary, and governance being one major challenge to face.
So diligence and control in our future. Yeah.
Definitely one very beneficial side effect I see, with all this AI and automations and agents and the risk that comes with it, is that it forces us to be much more prescriptive with what we expect. Sometimes we say we're not very clear and precise with our goals, and if you want a machine to be able to read it and make sense of it, you need to be very clear. So already prompting is an exercise that forces us to be, to learn how to be very clear and structure our thoughts and objectives. Same goes for our data. If you want a machine to be able to, take over outreach or nurturing for your entire CRM database, you better have clean data that it doesn't write to the wrong people with the wrong company name or things like this. So I see that as a pretty good side effect. Will force us to be much more sharp, clean up the mess, and hopefully by the time we get there, we'll have much more diligence, and control will be in place, which is I think the other two main challenges that we are facing now, at least the two focus that companies have to invest on to leverage AI the best possible way.
Agree. Totally a game of diligence and control.
Mm-hmm.
So, Jean-Yves, thank you so much for spending time with me today. I really appreciate it. And thanks for sharing these insights on your massively metric organization.
Thanks, Liz. It was a pleasure to be here.
Thanks for listening to Twin Signals, Metrics at Work. See you next episode.